Good morning, Hadyn. Thanks for joining me this morning. How are you guys doing there?
Morning, Gary. Thanks for having me on this debut chat about our beloved currency. And yeah, all good. It's Wednesday morning, so hump day, as they say.
Fantastic. So, Hadyn, today is the budget speech that Tito Mboweni is going to be sharing with us a little bit later this afternoon. Obviously, this is always a big risk event for South Africa and for the Rand. We obviously will get some positives, and there could also be some potential negatives. Is there anything particular that you feel that the Rand should look out for right now? Any ideas as to where we're headed?
Sure. Yeah, 24th of Feb today, Tito Mboweni takes the stage at 2 p.m. this afternoon. I believe he's doing a bit of a hybrid session, so there will be a few live bodies in Parliament and then a big virtual display, which we'll see, I suppose, on the TV stations. But if you'd asked me that question, Gary, a couple of months ago, it would have been pretty much all doom and gloom. The October mini budget speech, which was pretty much as we were coming out of the height of our lockdown restrictions, it was bad. There was predictions of terrible revenue shortfalls from a tax perspective, terrible GDP, contractions over 2020. I mean, it's just, we were all there, we know what we went through. The good news is that things have improved quite a lot since then. I mean, there's still a lot of potholes that the Rand's got to navigate, and I'm sure that we will get tripped up along the way on some of them. But from a positive perspective, and something that we just couldn't have foreseen, we've had what's being dubbed as a commodity super cycle getting underway. And simply put, South Africa is an exporter of natural resources. We luckily have got tons of coal and copper and everything else under the sun that the rest of the world needs when they're wanting to build their economies. And it happens to be that the rest of the world is trying to build their economies, trying to get out of their own COVID-induced slumps. The prices of these commodities have skyrocketed almost to record highs, as well as the volume of the commodities that we're exporting has skyrocketed. And that's led to quite an impressive trade surplus for South Africa. We're a net exporter right now by a long way, also because we're not importing a hell of a lot because our local demand is suppressed. And when you have a trade surplus, that's positive for the currency. But more than that, the sheer volumes of goods or commodities that's been sent out and the money that's been earned as a result has meant that the taxes earned in that specific sector has far outstripped what was expected. And the initial figure was around about 300 billion rand that we were going to undershoot on tax collection for 2020, 2021, which would have left a huge hole in the fiscus. Fortunately, the commodity sector has picked up the tab to the tune of roughly 100 billion. So that lightened the load significantly. We're still going to have a shortfall. It's still going to be bad news, but never as bad as what we were thinking. It just gives Tito a lot more room to play with, not having to hike taxes, presumably. There might be a little bit on some taxes going up. There's always the odd tax increase on the fringes, but a significant increase in corporate taxes, I think, off the table. Increase in the top level personal income tax bracket is, I think, off the table. So there will be positives today. Other positives which the Rand might enjoy include, our GDP forecast for last year. The contraction was supposed to be around about 15 to 16%, so negative 15, negative 16% because of the lockdown-induced restrictions. That's going to be revised better. Our debt to GDP ratios are going to be revised to a better position. So hopefully that's enough to impress the rating agencies out there and the wider market. And let's wait and see. But yeah, it's a better picture than 3 to 4 months ago.
Just for the average Joe, the rating agencies, what is the importance of the rating agencies' ratings for South Africa?
Sure. So for quite some time, South Africa was hanging on tender hooks as Moody's kept us in an investment grade, i.e. we're a country where international investors can with confidence buy our government bonds, corporate bonds, and other Rand-based assets. Fitch, which is the second main ratings agency, and S&P had both downgraded us into junk status quite some time ago, pretty much towards the end of Jacob Zuma's era as president. So we only need one ratings agency to keep us in investment grade, and Moody's kept us above the line. When COVID hit and lockdowns ensued last year, unfortunately, Moody's cut us into junk status. That's all three. So we're now officially in junk status. And not only did they cut us, but they cut us quite aggressively. I think across the board, we're at least 2 rungs below investment grade. It basically means how much risk is there associated with buying our rand-based assets. And if there's higher risk, we have to charge a higher premium, i.e. our bond yields have to be higher. We have to pay back more in interest for those guys buying our assets or investing in South Africa. So if the ratings agencies who've all, again, I should have maybe had a look at this before our conversation, but I'm pretty sure they all have us on a negative outlook, i.e. their next move is likely to be down, deeper into junk status. If they're happy with today, then maybe they'll come out with some positive news to say, okay, we're going to revise you from negative to stable. And best case scenario would be actually a move back up the ladder, but I think that's unlikely. So what they say does mean a lot for the rand. And if they're negative, the rand suffers. And if they're positive, the rand has a nice little boost.
Brilliant. And then Hadyn, are there any other local events going on outside of the budget speech right now that you believe could make the rand move either way?
For sure. So the budget speech is the main event this week. Absolutely. All the headlines tomorrow and Friday are going to be about what Tito said, where they're spending the money, where they're going to potentially cut government expenditure, because Tito has promised 300 billion rands worth of government cuts, which is difficult given that 35% of their spend is in the labor force, and we all know how stubborn the labor unions are in SA. But there are a couple of other items which are on the radar. Yesterday, we had our unemployment rate, which came out for the fourth quarter of 2020. Unfortunately, it wasn't good news. There was half of the camp out there thought that employment was actually going to improve. South Africa was emerging from our lockdown restrictions. More and more people were going back to work. Some of the displaced workers would be absorbed back into the market. Others were saying maybe that's not the case. Unemployment is actually quite a quirky statistic. It's based on the number of people that are actually looking for work. And we saw that in lockdown, where unemployment fell to 22%, which was a complete anomaly, mainly because people just didn't look for jobs. So unfortunately, yesterday the figure worsened. We went from 31.8 to 32.5% unemployment. And yeah, that's rand negative, because it just, and that the fourth quarter is before we went into lockdown at the end of December. So it paints a bit of a weak picture in the labor force before our latest lockdown stint. On the positive side of things, however, we've got our vaccine rollouts. We received our first batch of Johnson & Johnson vaccines last week. We're already getting our medical staff vaccinated across the country. And Health Minister Mkhize yesterday announced that another 80,000 doses are arriving this Saturday. So it's a trickle through, but at least we're getting vaccines. And the deeper we get into our vaccination program, the better for our COVID recovery, the better for the rand ultimately, as we're able to one day get back to a normal sense of living.
Wonderful, Hades. And then Hades, I think really the last question that I have for you for today is just, obviously South Africa doesn't live in a bubble. So there's a lot of things that go on abroad, which also have an impact on our rand. And not necessarily matters what Tito Mboweni delivers today. These factors are just going to play out regardless, rand negative or positive. Are there any particular events or things going on internationally that you foresee would have an impact on the rand?
Absolutely. This week is perhaps different to most. We've got our budget speech. It's a big ticket item for the rand, but typically I would say at least 80%, maybe 90% of the rand's movements are driven by what's happening outside of our borders. We're an emerging market, a small emerging market at that, and we move along with the flow based on what's happening with the big guys, the dollars, the pounds, and the euros. At the end of the day, most of our trade is measured in dollars, as is most of trade around the world. So what happens in the States has a huge bearing on SA. And they've also got a bit of a mixed bag going on at the moment. There's pockets of dollar strength, which hurt the rand. And at the same time, there can be pockets of dollar weakness, which is good for us. On the dollar strength side of things, you know, they've been locked in a spiral of ever decreasing bond yields in the States. And just recently, the US 10-year, which is the benchmark bond that's on the market for the States, it fell to as low as 0.5 or 0.6%, which is, I mean, incredibly low. Imagine investing for 10 years and getting 0.5% a year. Low interest rates in the States means low demand for dollars. That is great for the rand. However, of probably the last couple of weeks to a month or so, that's turned around. US 10-year rates have started to increase, and just yesterday or the day before, we're sitting at 1.39%. Still low compared to our interest rates, but a lot higher than where they were. It spurs demand for dollars. Demand for dollars pushes the dollar stronger, and that hurts our exchange rate. We've also got pockets of improving economic data out of the States, manufacturing data across the countryside coming stronger than expected. That suggests that they're going to outstrip the rest of the world in their economic recovery post-COVID, and makes it an attractive place to invest. And of course, is a source of dollar strength as people want to buy dollars to invest in the States. Fortunately for us, though, one of the major metrics that the world looks at is labor strength. And unfortunately for the States, their labor force got decimated during lockdown. I mean, they went to unemployment levels last seen in World War II. And they've struggled to come back from that. And the last week or two have seen pretty poor US labor stats. And poor labor stats, in a nutshell, means that they're going to have very, very loose monetary policy for quite some time. Loose monetary policy meaning that they're effectively going to print money to get themselves out of their hole. And they're going to keep interest rates, overnight interest rates in the bank at close to 0%. And last night, Jerome Powell, who's the head of their central bank, the Federal Reserve, reiterated this time and time again in the speech that he made. And that knocked the dollar onto the back foot, and the rand gained by 15 to 20 cents off his speech. So dollar movements will move the rand, and we just hope that they don't talk about rising interest rates over there anytime soon. Otherwise, the rand will be on the back foot.
That's fantastic, Hadyn. Thank you very much for all that insight. It was very, very interesting. And I look forward to chatting with you again next week. Anything else that you want to add before we finish off, Hadyn?
No, that's it. Thanks for giving me the opportunity. Look forward to chat next week. The rand moves on a daily basis. We'll have a completely different set of things to talk about next Wednesday. And let's see how it goes between then and now.
Fantastic. Pray for Tito's speech, and we'll catch up with you soon.